It's a timely reminder that D&O Insurance is not a silver bullet for board directors. And there is a lot of myths about this, and there's a sort of a false sense that if there's D&O Insurance that you're covered for all scenarios and there's going to be no problems in the future. Nothing could be further from the truth. You have to remember that D&O Insurance is only enacted when some sort of a legal matter is on foot. There's some sort of a charge, if you like, being pressed against the directors for some sort of wrongdoing. D&O Insurance will step in and potentially cover some of the legal costs associated with defending that claim. So it's not a free-for-all. It's not everyone's going to get money from the D&O insurer to run their own case. You may find that individual directors are not covered. So you can find a whole raft of scenarios where D&O Insurance does not kick in. And you have to be really, really careful about this. Fundamentally, you've got to make sure you're doing the right thing when you're on the board of directors. Secondly, when you are being charged with something, a claim is being made that you've done some form of wrongdoing, and typically this will often come about when a company has maybe collapsed, maybe there's been an act of insolvency potentially. You need to be super careful that you're not assuming that you're going to be covered in all scenarios, because there's a number of caveats with these D&O insurance policies. You will find that in certain circumstances the D&O policy does not take place. So when you're joining a board of directors, the first thing you want to find out is who are you insured by. You want to actually cite the policy yourself, and you want to particularly understand the exclusions. The exclusions are really important to understand because increasingly D&O insurance is getting more and more expensive, which means is more likely to be exclusions and more likely that you're going to find yourself in a scenario where you're not actually covered. Now, there's also an option in the market which is not as widely explored but should be, particularly if you're pursuing a board portfolio and you're holding multiple board positions. You should consider having your own D&O insurance policy. You would probably have, if you're operating across multiple enterprises, you'd probably have your own forms of, business insurance that you would carry yourself. But consider also having your own D&O policy so that you have your own best interests covered. Obviously, the company itself also needs to have its own policy. But with the exclusions coming through, the cost increasing, you may find that you can fall through the gaps. Now, at the end of the day, it all comes down to it not being the silver bullet. It is an offset against legal costs that may come through against a claim, whether it be legitimate or not. The reality is it's to offset legal costs. And so you have to be really careful here. Now, legal costs can ramp up really quickly, so that's an incredible advantage to have that policy in place, because before you know it, a claim could be, a multi-million-dollar claim. And you need insurance to be able to offset that. So you just need to be aware of the paradigm, and there are different quality D&O policies out there for sure. You need to be aware of who's covering you, what are the circumstances. Really dot your I's, cross the T's so that you're really well informed when it comes to D&O insurance.